innovation within equipment leasing that is hopefully taking hold, and whether you like it or not, is moving in a forward direction. My name is Phil Goldfeder. I'm the CEO of the American Fintech Council, and we represent, at this point, nearly every vertical or industry that touches financial services innovation, whether it's buy now, pay later, earned wage access, innovative embedded finance banks, and a host of many other verticals with the goal of fostering the future of financial services, but also trying to bridge the gap with regulatory and policy structures as we continue to grow. I'm excited. Bill and QuickFi is our newest member at the American Fintech Council, mostly because you put your money where your mouth is, right? You did equipment leasing in the traditional way. You built a very, very successful company. And then you realized we could do this again, but we could do it a bit differently, and built a company in QuickFi that is exceeding every expectations. I mean, I don't know who was expecting less of you, but exceeding expectations. And so let's just, start with you in terms of sort of what your thought process was when you started QuickFi, and how has that evolved maybe over the years?
Right. Thanks, Phil. Appreciate that. And it's delightful to be here with you. We've known each other for a couple of years, but it's just recently that I've joined. So when we started QuickFi, as you said, we had a traditional business. And we felt like the biggest risk probably to be the type of member that you see that's successful for an insider is that you're too cautious. And you tend to do things the way you've always done them. So we really tried to burn our bridges. One of my business partners, Mark Tomaselli, said, nobody's ever done anything great on a spreadsheet. We need to solve a real problem. So we started QuickFi and really made a conscious effort to do it fundamentally differently. But I'm curious, Phil, you're from a little bit outside the industry, or maybe I should say your member base is broader, right? You have a more diverse base of financial services businesses. I'm curious, when you see the ELFA and think about this industry, what do you see that maybe some of our members don't see?
It's funny, again, to look at it, it really looks traditional, right? Like the finance space and the equipment finance space, it looks more traditional. I think those who are starting to get ahead tend to see things in a bit more innovative way. And we saw that throughout history. And I'll maybe talk about our banks for a second.
Yeah.
I was at a traditional bankers conference at one of the states, and it's always a little awkward, and in theory could be as awkward today, where the message was, if you don't find a way to innovate internally or externally, you're going to be extinct in 10 years from now. And you're seeing it. You don't have to take my word for it. If you see what's happening in community banking over the last 20 years, you're seeing more and more banks are going away, and more embedded finance players are stepping up. I had one of my bank CEOs recently say, again, in a similar conference, that his goal, and again, he's an innovative bank, was to take everybody else's customer. Not on purpose because he's a bank taking another bank's customer. It's because he's partnering with all the biggest innovative companies who consumers are using. So it's not a question of what the companies want, it's what consumers are demanding, and I think that holds true across every space, right? Equipment finance, no different. And so, again, for us, we think about how do we continue to expand on that model, and think about how do we look at the similarities between some of our member companies and what they're doing and how they're innovating. And again, you and I, it's funny, and thank you, we've been talking for a long time in terms of the right time, the right approach. We think about embedded finance in a lot of different verticals. I think you were one of the first to think about it maybe in this space. And so how was that, right? Did you think that did you look at others who were doing embedded finance and sort of partnering with banks and say, oh, we could do this in the equipment leasing space, or did you see it a bit differently?
There's a famous fellow, I just thought of this, actually Deb Rubin, who's here. We had a conference years ago with the fellow who wrote The Driverless Car, and I'm blanking on his name. He was the head of the computer science department at one of the top universities in the US, and now he's gone back to India. But he came and spoke, and he's written 6 or 7 best-selling books, and he wrote The Driverless Car, and he spoke to the ELFA. And that was kind of our launching point to think about doing something fundamentally different. And the embedded lending strategy, the way we think about it, Phil, is pretty simple. It's, in the past, with our old businesses, we always had employees online, and customers were not online. And we thought that doesn't make sense. We saw other industries where the customer was online throughout the whole process, especially with a mobile device. And we said, but you'd have to redo all the workflows. That would be a big change because everything would work differently. So that's what we set out to build, was really to put the customer online to beginning to end, and that allows the customer to be there right at the point of sale with a mobile device to do the financing. And that was what was kind of revolutionary about that.
But how, again, I think you took a pretty big bet when you started. How is that paying off? How have you seen that evolution and where you are today? And then maybe to this crowd, sort of what's the advice? Like, what should people start thinking about?
Yeah, for us, so we've been very fortunate, right? Sometimes timing is everything, and I imagine with your base of businesses and seeing a lot more of the, maybe companies that are doing innovative new things, some work out, some don't. Probably a big part of that, I'll say, is timing, right? You have to be at the right place at the right time, and you can be too early, but we're very fortunate right now that, especially with the AI push, things are really coming to us. I know we'll talk a little bit at the end about what the takeaway is, but we feel it's a super exciting time, and we feel a lot of these new things with AI, we're at the starting line. Like, we're all at the same place. Nobody's behind yet because it's too new. It's brand new stuff. So it's super exciting time, and I would encourage people to look at it with that side of a mindset. Sometimes I hear people that are self-deprecating or they're critical of their own organization, and the reality is everything is changing so much, and it's all so new. I think we all kind of get a reset.
Yeah, it's interesting. Again, I think it's an interesting asset class, right? And it's funny, in preparing for this today and trying to understand the nuances and the challenges, and this is sort of, I guess, where ELFA comes in and plays a huge role, is really talking about what the asset class is and the value of it. I've spent a ton of time in the unsecured consumer space, right? And you think post-recession, companies that started, SoFi, Lending Club, Avant, Prosper, Upstart, all these companies in the consumer lending space and sort of in how they managed in their partnerships in the secondary market. Equipment leasing space probably doesn't get the credit it deserves, right? I think oftentimes in terms of an asset class, in terms of the value, is not always recognized, and you always start the conversation trying to explain what equipment leasing looks like. How have you thought about sort of the secondary market in terms of being a better proponent for sort of the asset class and talking, obviously, with your bank partners about the same thing?
Right. I'm trying to ask you some questions here too, Phil. So.
No, please. Can we just say, for the record, that Bill is the superstar here, and he thinks I'm joking about it, but again, to build two successful companies, right? And I'm sure you're not done yet. I don't want to say that. I feel bad for any of your team that may be here at QuickFi. I'm sure you're not done yet. But again, I think that you've really set the example. We're happy to help play a part of that role, but I really believe that you're the star.
Well, I'm curious, though, from an outsider's perspective, when you look at those differences, like look at some of those super successful companies that you've seen rise up. What do you think is going to happen with a space like this? And what would be your expectation?
Look, we're spending a lot of time now, data, right? Who's controlling the data? Who owns the data? The old the old debate was community banks like to own their customer. And that was the model, right? Community banks engage with their communities, understand the nuances, and they build a little bit on the back end. You've seen a bit of a shift, right? In terms of a lot of community banks don't care about owning the consumer. You're seeing fintechs are now fighting to own more and more pieces of that consumer, and that ultimately comes back down to, so where does the data play? Who is utilizing the data in the best ways to, again, ensure, this is not necessarily, like I said, it's shifted from the banks more to the fintech companies in terms of owning that consumer. Like anything else, a sticky consumer makes for a better customer, and ultimately, I think a lot of people are making the case that also makes for a better product, right? If you can keep a consumer in a similar sort of app, let's say, right? The consumer's getting a better experience in theory, but at the same time, you don't want to lose competition, right? Like, you want them to stay in the app that they're comfortable with, and I think that's what the apps are trying to do, but now you said, okay, now that I have a sticky customer, am I going to still offer them the best product? And so I think more and more as data is exchanged and as you think about data, consumers could do, I look at my daughter. I use my daughter as an example. Again, she's not buying a tractor anytime soon, so maybe doesn't play into the equipment finance space, right? But she uses 5 different apps to manage her finances. And thankfully, 4 out of the 5 are members of the American Fintech Council. I've made sure of that. But I've asked her, and I use this sort of as an example for me, like, how do you think about, why wouldn't you, if you're in this app for, if you're, saving for college, why don't they also offer a high interest savings account? She says, well, the percentage offering on that app is better than this one. And I was absolutely shocked, right? And so again, it comes back down to, she does sit with one core bank that connects to all of them, a more traditional bank, and I don't like to mention them, but and so it's a question of who is sort of utilizing the data and ultimately getting her better products. And so how does that translate?
Well, I can imagine, too, that some of the analogies between that market and this one would be probably those banks were under a lot of pressure, right? And they were being commoditized before this technology came in. So now, initially, maybe that technology gives them a differentiator because they're partnered with the tech company that's bringing them that flow of business that they didn't previously get. But how do those, because we see that too, like who owns a customer, and I think it's for in our market, what we see is a sharing, that like both can have it. The OEMs we serve, for example, that's sometimes less controversial, they want to be able to sell another machine to the same customer, and if they can have the customer in a mobile app throughout the entire repayment cycle, that makes it way more desirable for them. So the OEM says, well, I don't care about you guys down the financing chain, but I want to have that data, and I'd like my brand on it, and I'd like the customer to be looking at it every month when they're making their payment, because maybe they'll come back and buy another one from me. And the best customers, I can make an offer to them right in there to do that. I imagine something similar works out with you where it's a sharing, or how does that resolve itself from what you see on the consumer side?
Yeah, I think it's a sharing, and again, I use my own example where I have an app, but the tax documents come from a bank, right? That is not affiliated. And honestly, if I didn't know the back end, I'd probably be a little bit confused to try and understand why, how does, as a consumer perspective, where is that coming from and who's controlling it? And I guess that I'll turn that back to you because again, you partner with a lot of banks to end to end, right? And you've taken a multi-day process and really shrunken it down and enabled banks to engage in this business. How do you think about it? Meaning how do you sell that maybe when you're talking to the banks? Because the banks don't understand this, right?
And the banks are honestly were the most resistant. So, having run a company that was bank-owned, I had a lot of friends from this association. And when we put this business together, I went to them and I said, hey, this is what we've got, this QuickFi, and this is how it works. And some of my friends told me, wow, Bill, that's amazing. I bet someday everybody will be using that thing. Good luck to you. And I remember thinking, but what, wouldn't you want to use it? And some of them just told me, Bill, candidly, I wouldn't even know where to begin. I wouldn't even know who to talk to. I wouldn't even know, we've never changed our business model. That's not going to happen. This is years ago, but it was very hard. And I realized, wow, this is going to be harder than I thought because we happen to work for a pretty entrepreneurial guy before we became part of Royal Bank of Canada. And that's not how all banks work. So what happened was OEMs got involved, and OEMs started calling us. They saw a few little awards we won in the marketplace, and they said, well, we want that thing. And for all those reasons I mentioned, they said, this is going to be way better for us. And then we had business that we would place with banks because they would sell portfolios of business, and they'd want to continue to be serviced in their name. But they asked us, could you introduce us to some banks? So we'd go back, and the banks would say, well, that's great. We'll buy the paper. And then after the banks started seeing how it worked, they started getting more involved on the front end, and that's where we are now. We have much more bank interest. But it was a long way around. That didn't just happen. And you can kind of, in hindsight, understand why, right? Because, it's not often that they're changing their business model. And I don't know if I don't know if your banks are similar to the members here. Do you have some overlap? Or?
Yeah, again, not as much as you would think. I think, I often, there's different sectors and people get more comfortable in areas they know. And you see that more and more with fintech. And I had an interesting conversation with a lender that's in the high-end dental finance, right? And I was curious, the natural next step is maybe cosmetic surgery or other types of cosmetic surgery. He says, no, we know the dental space, right? That's sort of the space we know, and we understand our algorithms and our innovation sort of is built around the psychology of that consumer, and that is different than someone who's maybe getting, breast augmentation or calf implants, right?
Yep.
It's a different psychology in terms of how that performs and how the paper performs, which obviously will impact the secondary market.
I happen to know the company you're talking about, and we've never talked about this before, but I just know, and they actually came up from financing consumers getting dental procedure, and then they were asked to start doing the equipment, and then they partner with banks that aren't part of this. But they've made quite an impact.
Yeah,
Yeah.
absolutely.
Yeah.
Okay, so let's talk. I mean, it's either digital assets or AI. Wherever I go, wherever we're talking about, like everybody wants to talk about stable coins or AI. And so we're not talking about stable coins today.
Thank God I don't know anything about stable coins.
Okay, good. So we're not going to get into it. Let's talk about AI because, again, I half joked. You and I talked a little bit last week, and I half joked about sort of what you're on to next. But it's really exciting, not just sort of resting on your laurels in terms of what you've built at QuickFi. And so I guess maybe one, for those, and again, the room, and we're talking to a lot of different people, let's start with AI, and then maybe just explain sort of the differences AI and agentic AI, and then how you've already started to sort of implement it and build success on that.
Right, right. And again, this is something I think a lot of these companies will be thinking about themselves, and we're at the starting line for it because it's all brand new. So I don't want this in any way to seem like this is a fully baked concept. But for me, Phil, the thing, and just very briefly mentioned this in a presentation yesterday, OpenClaw, are you familiar with that? So I think this OpenClaw revolution was an eye-opener for me in the difference between agentic AI and AI. And the capability of AI intelligence to actually do things in companies on a recurring basis. And if you go and watch YouTube videos, you can just be absolutely inspired and amazed at the capability. It was mentioned by Jensen in his annual speech yesterday that the most valuable company in the world is pushing OpenClaw and suggesting that OpenClaw is profound movement. That's something that was started by one person, right? And then it became kind of a revolution. So it's the capability, though, for AI to actually do tasks. And I think that's what we see in our model, Phil, is once you have the customer online and you get to that embedded finance model, there's almost no part of Michael Porter's value chain, people business background, what is a customer experience that you provide value? There's almost no part of that that's not going to be revolutionized with agentic AI. In other words, the system's actually doing the process. When this happens, we always do this for the customer. Then when this happens, we always do this. And instead of people in your company doing those things, you're going to have orchestrators. People will be orchestrators, but the agents will be doing those things. And it's easy when you start looking at something like OpenClaw to see, okay, I can see how that's going to come next.
Well, let me, and I'll sort of, again, go back to sort of my experience. Going back to 2015, 2016 with the online lending space, machine learning, right, alternative data for underwriting was all the rage, right? Everybody was talking about we're using alternative data to sort of reach more consumers. But when you really looked under the hood, right, most of it was credit score with maybe their rent payment built in, maybe. It was a lot of talk. It was a bit more tricky to sort of cut through what is hype versus what is real. So maybe that's a good sort of where we are today. How many people are actually using this, right? And what are maybe the real use cases? Now, I think particularly in equipment lease and finance, especially with agentic AI, it's not a perfect system and not everybody fits perfect. And so being able to use agentic AI to sort of cut through some of the ambiguity maybe in some of the applications and some of the processes, but it's a great talking point, but what is real and what have you seen people actually implementing?
And every product out there is being rebranded as with AI. I saw a presentation about 10 years ago by a gentleman who had talked about the potential for AI, and he said it's going to be like electricity, right? Before electricity, there was all sorts of stuff, and then after electricity, there was all sorts of stuff that was enhanced with electricity, and it was quite different. And he shows a hand drill and then a power drill. And I remember thinking, wow, that would be a profound thing. I feel like we're at the very early days of that actually happening. So there are a lot of products that are a hand drill still. It really doesn't have AI in it because it's a hand drill. It doesn't have electricity. But I think that almost everything that we do is going to be transformed. Now, I probably am one of the few people when people talk about how is it overhyped, I would say it's underhyped. I just have been playing with it enough that I feel like it's going to live up to or exceed expectations. Now, when something is a bubble, everybody asks about what's a bubble. I think when there's whenever there's a gold rush, right, there are a lot of people who come and try and take advantage of it. And we've seen that throughout history. So it's really a real underlying thing. Will there be a lot of shenanigans around it? Will there be a lot of things that weren't real and people trying to make money off it in ways that don't really add any value? Yeah, that's probably going to happen too. But is it a real thing at the core? I think it's a huge thing, Phil, personally. How do you feel about that? Because you probably see much more use cases than I do.
Yeah, I think today the American Fintech Council has over 160 members, Quick5 being one of our newest. Every single one of them is now built AI into their boilerplate, right? When they put out a press release on the bottom, like they're using AI for this or for that or the other. I think the biggest fear is when you have entrants in emerging markets, and we've seen this through online lending, like I said, buy now, pay later, earned wage access, embedded finance. I think we can all look back over the last 10 years and look at all the mistakes that were made, right? Embedded finance is a good example where the stories are still happening even today. Usually Sunday morning, fintech newsletters are still talking about some of the challenges that the software companies stepped into banks, offered some promise of embedded finance, as we were just talking about. Like, the promises were great, delivery maybe not so much. And the fear is anybody who's doing it today really has to do it right. And I say that to all of you because I think when you, especially after a conversation like this, all of a sudden, oh my God, I've got to get into this, right? I'm doing it traditionally, and clearly the world is changing, and so I've got to move. When you move too quick and too fast, you tend to break things, right? And especially in a regulated space. Anybody who gets in, you want it to be as organically as possible. And I look, again, it's why I've always been fascinated with what you've done, is because you've done it organically, meaning you've been able to kind of build stepping stones, right? Build something, test it, build on top of it. Test it, see how it works, talk to more banks, and build on top of it. And to me, sadly, not everybody's going to do it that way. And you're going to have to deal with the consequences of that, because one day on the cover of the New York Times is somebody who got in trouble or got screwed or got ripped off. You who have been doing it the right way are going to have to bear the consequences. And so I think that's a lesson for everyone, is that as you embrace AI, agentic AI, in different ways within your processes, and there are a great number of vendors outside that you should all be looking at and talking to, because I think they're great systems, there has to be a certain level of comfort internally. What can I understand? Do I understand it? Do I have the right people to understand it? And then how do I move forward?
Phil, that's one of the things I've always admired about you and the way you've run your association, is that you've had a real focus on transparency, values, treating customers right. You and I, a couple of years ago, before we joined, had a conversation about that, and I think we kind of whipped each other into a frenzy about the abusive practices out there and the deception and making things customer-friendly, making them simple. Share a little bit about that, because I think it goes to that last point as well.
Yeah, when we were found, there was a precursor to the American Fintech Council. It was called the Marketplace Lenders Association. Again, in 2015, fintech was really marketplace lending. As fintech started to expand, we rebranded about 5 years ago to the American Fintech Council. And I came in as a board member long before I was CEO with the thought of, we've got to be different. There are a lot of trade associations who advocate for advocate's sake, meaning the idea of protecting the industry at all costs was sort of what trade associations do. Not all of them, but many of them do, and that's what they're built for. And you could see it from some of the biggest banking trades. It doesn't matter what's right, wrong, or indifferent. Their job is to protect their base. We thought about our base a bit differently, right? Meaning the base of businesses and companies that are a part of the American Fintech Council came at it with two distinct goals. Number one is we're offering something different. We're in the emerging space, so we have a unique opportunity. And again, going back to the online lending space, we have a unique opportunity to do something different. And number two, if we build the right standards around it and the right protections around it, then we can actually build ourselves to last, right? We always differentiate ourselves from the turn and burn, right? Like we'll make as much money as we can until government shuts us down. And so we thought of ourselves as a standards-based organization, which would have been an easy, over the last few years, especially over the last 18 months, it would have been a very easy thing to get rid of. It's like, oh my God, look at the political environment today. Like we can get away with a lot more, quote unquote, but is that the right thing to do? And are we building a sustainable model that doesn't worry about the political shifts or the ideological changes or who's in the administration or who's in the White House or who's leading any given agency? We want to build something that is a good product, emerging industries to serve consumers, but can stand the test of regulatory changes. And it's something that we've, again, for me, it's about values. Like, how do we think about who we are and what we're trying to build? And I want to be able to go to bed at night and look in the mirror and say, hey, we're actually changing the world for good. Now, as an industry representative, I like to think that that's the right way to do it.
From a long-term perspective, it is, for
yeah,
sure.
and look, I think about our membership. If you want to build a business for 2 years, then I don't want you, and I don't think I want you because you're not a sticky member for me. And number two is you're going to do something wrong, and you're going to be the one that's causing the problem. I want you, when you're thinking about the industry of, I'm building buy now, pay later today, but I'd love to think about what else I can offer now that I have this consumer, and how do I think about it in offering it the most competitive product. But, again, on that is, we don't just think about it from the industry perspective. We really think about it from how do we engage with government, with policymakers. How do our companies think about themselves under a CFPB directed by Rohit Chopra and the Biden administration and by no one today, or Russ Vought today, right? In terms of nothing should change. And I will point you to letters that AFC wrote 4 years ago or 3 years ago that we've actually just turned around and said to this administration, we asked for it 3 years ago, still asking for it today, and the chips will fall where they may. And again, a responsible company will build around responsible regulatory structure. And so I think that's sort of what makes us a bit different in the way we think about it, but it requires the right member. And that's kind of where you come in, and maybe in terms of how do you think about how do you talk about yourself? Not just from a business perspective, how do you see yourself in that ecosystem?
Yeah. I had the honor about a long time ago, 15 years ago, being chairman of this association and being involved with the board. And it's very much the same philosophy where we've tried to include the customers of our member companies as part of our constituents, right? We have to serve the industry. We have to add value to the economy. We have to make things better. And then we all add value and we all succeed together. And we put some things in place about standards of practice and the way you conducted yourself and things that are exactly analogous. I think there's going to be a great fit, Phil, for you and the things you're saying and the things your organization does, which is totally diverse and quite different from the ELFA and what we do here. I know probably a lot of the folks here are going to look forward to meeting you. I don't know if you're going to be around for a little bit after that people can, because I know we're...
I didn't ask him to do that, by the way.
No, but I think it would make a lot of sense.
So let me ask you again. You talked about the idea of disrupting, or like, hey, we're going to just do something different. What's the best advice? And again, maybe the takeaway, because we've talked about a lot of different subjects here. And is it just, again, we sort of emerging what we've just talked about? Is it disruption for disruption's sake, or what are the natural next steps to sort of advancing the industry?
Yeah, I just think I think the tide goes in and out with different funding sources and strategies. Some of that is kind of arbitrage, and a lot of it's not changeable, right? You have your way that you fund your business. You're either a bank or you're not. You securitize or you don't. Maybe you can work toward becoming a securitizer if you're not doing it. But those are hard levers to pull, or maybe there's no lever there. What's really about to happen that's changeable, and it may be a huge opportunity for the early adopters, it may be a big adverse consequence for the late adopters, is the agentic AI thing that's coming. And we're all at the starting line. You're not behind, and just learn about it. And there are things you can do on a subscription basis. Perplexity has a new thing called Perplexity Computer. It's a little bit like OpenClaw. Manus, for years, they have a version, I think it was just bought by Facebook. They have a version, essentially, of OpenClaw that you can just run on a subscription basis. You can, for $500, buy a little Mac Mini, and you can play with it. You can just do it on your personal stuff at home. But become the expert and play with it and see the capabilities, and then I think that will open up your mind of what this tremendous opportunity is, and then have fun with it. This is the most exciting time in my career. And I just feel like I'm really blessed to still be able to go to work and do something I love every day. And hopefully other people adopt these new technologies and feel the same way.
I often say, when you're 5 years old and you see a fire truck going down, you're just like, ooh, I want to be a fireman. And then you're 6 years old and 7 years old, and you no longer want to be a fireman. You want to be, whatever the next thing in your head is. That's very hard to do in practice. And again, why I give you the credit, because I think a lot of people would have looked at your career beforehand and said, oh, I could just stay here and do this, right? I could just continue to do this and sort of continue to sort of stay that path and you decided to sort of step up and think about QuickFi. And even within QuickFi, and I'm now getting more of a front row seat, you're changing it up day in, day out. You know, again, we've talked about how you've already implemented agentic AI. The one thing I would ask, and maybe sort of say the same thing, is it's important to engage. Engage with each other. It's why ELFA is so important, because I think better understanding, and forget talking to me, to understand sort of Bill's journey and his path and what he's doing today before you do it. As I mentioned, it's not a question of if someone's is gonna run afoul, someone will. I don't want it to be anybody in this room, and the best way not to is to engage with Bill. And I think we're at Bill, and I hope we're going to continue to work together, is how do we engage with policymakers and regulators and sort of tell that story. Because I was in Washington last week, and we're getting those questions today. Usually, interestingly enough, regulators tend to be a couple of years behind. Policymakers tend to be a couple of years behind. As I talked about, it's either stablecoin or AI. Every time I walk into a member of Congress's office, like, those are the two questions we get, but they want the real case. They don't want the talking points. And they oftentimes, when we bring in our members, they say, okay, stop. Don't tell us what AI could do or the power. How are you using it today? How is it different? And they want to know what you're challenging with. And so whether you're talking to each other, where you're engaging with policymakers, with regulators, whether you're sort of thinking about what other sort of innovations you can make within the space, like I said, it's critical to lean on each other before you go and take those steps so that we can all build a more prosperous future. And most importantly, continue to serve our consumers in the best way we know how. So with that, Bill, thank you very, very much for being a part of our membership, but obviously for your years of service and everything that you built. Congrats.
Thank you for coming to join us today. I think this is the beginning of a beautiful relationship.
Thank you, everybody.